This is the Uptick Newswire Stock Day podcast, sponsored by InvestorsHangout.com. Subscribe to us on iTunes, Google Play, and YouTube to stay up to date on penny stock news and interviews, public information on OTC, pink sheets, and microcap stocks from around the world, with your host, Everett Jolly.
On today's show, we have a returning guest, and it's been about 7 or 8 months. And I know a lot of my listeners have been wanting an update on Bulova Technologies Group. Well, we got the CEO with us today. We're going to talk about things that happened in 2017 and what's going to happen in 2018. They trade on the OTC markets, ticker symbol BTGI. I think they're grossly undervalued here at 0022 to 25. And with us today to talk about the company is the CEO, Steve Gurba. Steve, welcome to the show.
Everett, enjoy being back on the show. Glad to be here.
You know, you just ended your fiscal year of 2017 and at the end of September 30th. How do we look and what's going to go happen in the 2018?
Well, Everett, as you know, our fiscal year ends September 30th, so our actual business year is October 1 through September 30th. And, we acquired this business in January of 2016, so in January we'll own it 2 years. So, roughly a year and 8 months into it, a lot of things have really happened. We actually have done 4 acquisitions. We bought the original 3 Twist companies, Twist Transport, Twist Logistics, and Twist Cold Storage. And we also bought a small firm that was doing business in Canada, which gave us access to Canada. We've bought a local firm here in the Florida area near us, called Global Refrigeration Trucking. And we then completed an acquisition in July, just 2 months ago, of an entity called Big Red Transport, which is located, the headquarters is up in Netcong, New Jersey, about 50 miles from New York City, off of Route 80. And they also have a major hub in Chicago. And that ends up being a real interesting acquisition for us, which we can talk more about, but it gives us a big triangle, as a lot of our runs are between Florida and the Northeast, and now the Midwest and back down. So, in a very short period of time, we've done 4 acquisitions, and what that means for us on an annualized basis is sales in the $40 million range and a positive EBITDA. In terms of closing out September 30th, 2017, our sales stayed consistent for the quarter, primarily because of the addition of Big Red. We end up picking up Big Red for a little bit of July, August, and September, which helped us a bit because in September we had a significant hurricane, as you know, here in Florida. And our normal sales for Twist were affected by about 50% for the month for a number of reasons. Number one, our customers were shut down. We couldn't put trucks on the road without product, so we had trucks sitting in the yard here for a week. We're really just getting over the effects of that right now. We had some damage to our facility here in Largo, Florida, to the tune of about $500,000 in repairs, which we hope to have done over the next month. But, having the Big Red acquisition in there, which was in the Northeast, it wasn't affected by the storm, and so it kind of balanced out the act for us. So we should be finishing up September 30, 2017 annual sales somewhere in the 25 million range. Our auditors, our outside auditors have started the audit. The audit will be done by the end of December, and we'll publish our 10K, and we will show a profit for the year of probably something in the $3 million range. We won't have final numbers, obviously, until we have the auditor's final results, and we'll publish that. So, while we could always do better, I think the last 18, 19 months, we've come a long way from where we were prior to 2016, and we're looking forward to a strong 2018.
You know, I have a lot of listeners out there that follow your company. I've gotten some email in the past week or two. They said if you get a chance to talk to Steve, ask him about printing out more shares and then paying off debt. Maybe you might want to speak on that a little bit.
Sure. To give a little overview in the share area, if you will, today we actually have 697 shareholders. This is our clearinghouse for shares is Clear Trust here in Lutz, Florida, and as of today, there's 697 holders of shares. About 139 of them are active on a daily basis. Our shares authorized at the common share level are 900 million, of which outstanding today is 598,742,276 to be exact, and we have reserved about 301 million that have to do with us selling, with certain debt holders selling off their debt, and therefore paying down that debt to various firms. We have 5 of them out there today that hold that 301 million reserve shares that undoubtedly they will sell over the next 4, 5, 6 months. One of the ways that we take care of debt, particularly with shareholders who have put money into the company, is obviously to exchange shares for debt, and we use that. It's an expensive way of using the stock, but it's one of the reasons we're public. And I believe over the next few months we will probably increase that 900 million to 2 billion. And at some point in time, either look at buying back in shares as we get stronger on our balance sheet, or depending on what acquisition we may do, there may be an exchange of shares between that company and ours, what have you, as we are looking at acquisitions in 2018. As a reality, we have one that we're fairly serious about right now that we're looking at. So, I mean, we have bought down probably $250,000 over the last few months with the exchange of debt for shares. It does dilute the stock. I recognize that, but on the other hand, our real goal here is to build this company up from a sales and profitability standpoint. And at some point in time, we need to escalate this to the NASDAQ. And in order to do that, we need to change our balance sheet.
Understandably.
And the approach that we're using there is really to get debt down. And one of the programs we talked about the last time was we have created a preferred A share and a preferred B share. And over the next couple of months, certainly before the end of the year, we anticipate that we will get additional shareholders to exchange their debt for the preferred A or preferred B. And I know many of our shareholders out there will say, well, you've been talking about that for months. Well, it's not as easy to get it done as it sounds. People have put real cash in loans into this company, and it's not easy to just convince them to say, I'm no longer going to get that loan back, I'm going to take it in shares. And so negotiating the things you get with that preferred A and B is part of the process. But I do think we'll be successful in that. As you know, we sold off one of our divisions called Bulova Technologies Ordnance, and in doing so, we did reduce $10 million in debt. We have gotten out of the compliance and security business. We are in the process of finalizing a deal on National Health Net, which essentially will be done for a note on the inventory, and any debt that's associated there will be reduced from the balance sheet. And we have a potential buyer. We're not at liberty to discuss it yet, but we have a potential buyer that would be interested in the machine tool business.
That's outstanding.
And if we can conclude that would remove an additional between $6 and $6.5 million worth of debt off of our balance sheet. So the net results of all that over the last year is our debt will have come down, close to $15 million, and we will have the ability if I can get the preferred shares to happen, to drop that another maybe 8 or 9 million. And at that point in time, our assets are actually higher than our debt, which is something we haven't had in a long time here. And that combined with continuing to increase sales through just getting new customers, streamlining the business, looking at new acquisitions. We think that somewhere during 2018, we stand a very good chance of the stock moving dramatically and hopefully getting to another board.
Absolutely. Absolutely. Are you still with People's Bank? You still have a credit line with People's Bank?
We have bank financing in place right now to the tune of about $13 million with Sunshine Bank in Tampa, Florida. And we have about a $3 million line of credit with People's Bank in Pennsylvania for our business at Big Red. So the banks are supporting us to the tune of about $16 million right now. We have a prior owner of the Twist Companies that has a note for approximately $4 million or so, and we're hoping to convert the rest of the balance sheet debt over to preferred A and B, or sell off that debt via selling the entity off.
Bulova Technologies is the company that we're highlighting today here on Stock Day. We're talking with the CEO of the company, Steve Gurba. They're going to finish the year around 25 million in revenue in 2017. 2018 is starting around the first week of October 1st. Getting back to the Big Red transport, I was reading a little bit about it. I think they got about 27 trucks. How is that going?
Well, we completed that acquisition the third week in July. There's 27 trucks, 45 trailers. We are looking right now at increasing the amount of trucks up to 45 and the trailers to about 60. They have about 70 customers, good customers. The main product there is light load LTLs as opposed to full truckloads, which obviously we get more money per mile for doing the light load projects. We do a lot of work in the city of New York and out to Chicago. Their basic runs are between New Jersey, Chicago, Boston, and back down to New York. And then you add in the complementary work from Twist, where we're coming into the Northeast with product. For instance, in the past, we typically took a 53-foot load of product up into the Northeast and dropped it off, and then someone else would take over to do the light loads and deliver that to the various customers in the Northeast. We now are turning that over to our own business that we own, that we just acquired. And so while Big Red's sales typically have only been $6 to $7 million a year, with the work we bring synergistically, that acquisition really creates, without doing anything, just with our own customer base, that moves them into the $12 million range.
Wow.
So if you take that and add it to our basic trucking that we have right now of $25 to $28 million down here in Florida, that's how we look at 2018 and say, well, if we just maintain our current customer base and do a good job there, we should have sales in the $40 million range. If we can increase the customer base, which I believe we will, we're going to need trucks and trailers to do that. And we're in the middle of looking at how we're going to finance that. We may actually lease some of these vehicles. We're in discussions with Penske to do a major lease on a good size amount of trucks, and as well as the trailers. And the interesting part about that is when you work with Penske, they actually pick up the maintenance of those trucks and trailers. And when you do that, that eliminates a lot of cost for us, because today we buy all of our inventory, such as tires and oil and whatever that may break down on a truck. We would no longer need to do that. And we would be able to eliminate our maintenance group. On the other hand, Penske would hire that maintenance group. So it's something we're seriously looking at. And they would actually perform those operations at our hub here in Largo, because we have a maintenance facility, as well as up in New Jersey. So, if we were to go that route, we actually save about $800,000 a year, because we're no longer buying our own spare parts and particularly tires. I mean, if you can believe this, we buy about $500,000, maybe almost $600,000 worth of tires a year. as we're doing about 12 million miles.
That's amazing.
So we see that expansion as being very positive.
If somebody was listening to the interview, Steve, I got to ask you this question: why should they go out and buy your stock next week?
Well, other than if you really like the transportation industry and believe that transportation's going to continue to grow, which it will. But I think we've done a very good job of transitioning a public entity. In 2015, our sales were $2 million. And so we've grown this thing dramatically at this point in time. We're going to continue to do that. In 2018, as I said, we are looking at another trucking acquisition, which we can't disclose yet because we don't have a letter of intent in place. We are looking to dispose of entities to reduce debt. We're also looking at a potential acquisition of a business that's in the transportation sector, but actually has a product, which would tie in very well with our reefer type activity. As you know, 99% of our trailers are reefers for our business. And there's a product line out there that we're very interested in that our customers love, that we may be able to either partner with or bring into the fold at BTGI for some sort of a stock exchange, should that meet the requirements of their board and our board. So we're looking at items here that really could get our sales up over $100 million, which is the goal. And when we do that with a cleanup of the balance sheet, there's no reason why we can't move this up to the NASDAQ and increase our stock significantly. I can't promise those things are going to happen, but that's what we're working towards.
Well, I think you said a lot today. I think you said it all. You brought us up to speed. In closing, is there anything that we didn't touch upon that you would like to get out there to the listeners?
No, I think we've touched on everything, Everett, and I thank you for the time. And I have an open door to any shareholders. They've got believe me, they have my emails, they have my phone number, and if I don't return somebody's call that day, I certainly return it within 48 hours and try to answer the questions that I really can answer.
Well, I want to thank you for coming on the show. It's been a while since you've been on here. Hopefully you'll come back on in the next 60 days, give us an update of what's going on in the first quarter of 2018. I wish you nothing but continued success, and thanks again for your time.
Thank you, Everett. Thanks very much. Bye-bye.
This program is entirely sponsored and produced by Uptick Newswire, LLC, which is responsible for the content. The opinions and information provided on this program are those of the guests and those of the respective companies they represent, and do not necessarily reflect those of the staff or management of Uptick Newswire. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional. The guests of this program may have paid for its distribution and are not directly affiliated with Uptick Newswire or this station.